Have you ever woken up at 3 in the morning and wondered if your life savings will actually last? You look at the prices at the grocery store and realize that your dollar is shrinking every single day. It feels like an invisible thief is reaching into your bank account while you sleep. The news tells you that the economy is booming, but your gut tells you something different. You see younger people chasing the latest digital currency or the next big tech trend, but you have worked too hard for too many years to gamble with your future. You are not looking for a lottery ticket or a way to get rich overnight. What you truly want is a fortress for your wealth and a guarantee that you will never be a burden to your children. You want the peace of mind that comes from knowing your lifestyle is protected. Today we are going to talk about a system that has survived every single market crash since 1974. This is not a secret fund or a complex financial product sold by a high-priced advisor. It is a wealth extraction machine that has been sitting in plain sight for over 50 years. And right now, in 2026, it is becoming the most important tool for anyone over the age of 55. Most people think they understand index investing, but very few can explain why it consistently wins. They assume that the market is a random collection of companies that go up and down, but that is not how the S&P 500 actually functions. Think of it as a self-cleaning oven for the American economy. Every year it identifies the weakest companies and automatically kicks them out. Then it takes the most successful and profitable businesses and brings them in. It does this without emotion and without human error. This means you are always owning the winners of the global economy, whether it is the rise of the internet or the current explosion in artificial intelligence. The system automatically pivots to where the money is flowing. This is why active managers who charge high fees fail over 90% of the time. They are trying to predict the future, while the index is simply capturing the present. Think back to the oil crisis in 1973 or the Black Monday crash of 1987. Consider the dot-com bubble that wiped out trillions or the great financial crisis of 2008. And most recently, the global pandemic that shut down the entire world economy. In every single one of those moments, the world felt like it was ending. Experts on television told everyone to sell their stocks and move to cash or gold. The people who listened to that advice locked in their losses and stayed poor. But the people who did absolutely nothing saw their wealth compound through the chaos. The S&P 500 index did not just survive those events, it grew stronger because of them. It is mathematically designed to grow as human innovation and productivity increase. As of right now, there is over $16 trillion directly tied to this single index. That is a massive amount of capital that creates its own gravity in the financial markets. When a company is added to the S&P 500, thousands of funds are forced to buy it immediately. This mechanical buying pressure creates a floor for prices that most investors do not understand. It is a structural advantage that favors the patient holder over the frantic trader. If you are over 55, you probably feel like you do not have another 20 years to wait for a recovery. This is a common fear, but the data shows something very different. The average recovery time for a market correction is actually less than 5 months. And since the year 2009, the market has fully recovered from 11 separate drops of 10% or more. The risk is not the market going down, because the market always comes back. The real risk is your own behavior and the temptation to sell when things look scary. Wealth in retirement is built on two things, which are math and discipline. Let us talk about the math of the 4% rule. Financial experts have proven that if you withdraw 4% of your portfolio each year, you will likely never run out. For a $1 million portfolio, that is $40,000 of annual income. When you add that to your Social Security benefits, the picture changes dramatically. A typical couple can see a total retirement income of nearly $100,000 a year. This is a comfortable and dignified lifestyle that does not require you to check the stock market every hour. But to get there, you have to cross 3 psychological tipping points. The first tipping point is when your investments earn more in a year than you contribute. This is the moment the engine starts running on its own fuel. The second tipping point is when your portfolio earns as much as your actual job pays. This is where you have essentially cloned yourself and your income. You now have a second version of you working 24 hours a day without a salary. The third tipping point is when your money can replace your full-time job forever. This is true financial independence, and it is closer than most people think. In 2026, corporate profits are sitting at historical highs of nearly 13%. Companies like Apple and Microsoft and Nvidia are generating cash at a rate never seen in human history. These companies represent the backbone of the S&P 500. When you own an index fund, you own a piece of their success and their future. You are not betting on one company or one CEO, but on the collective intelligence of the workforce. But there is a dark side to the financial industry that you need to be aware of. Many financial advisors will try to steer you away from simple index funds. They will tell you that the market is too dangerous or that they have a special strategy to protect you. They will use complex terms and charts to make you feel like you are not smart enough to manage your own money. In reality, they are often just trying to protect their own commissions and fees. If an advisor charges you 1% a year, they are taking 20% of your potential returns over time. That is money that should be going to your grandchildren or your travel plans. The S&P 500 index fund from companies like Vanguard or BlackRock costs almost nothing. We are talking about 3 basis points, which is only $30 a year for every 100,000 invested. This is the ultimate marketing victory because it makes the most profitable path, also the cheapest. As we move further into 2026, the American economy has structural advantages that other countries lack. We are energy independent, and our workforce is younger than that of China or Europe. The rise of artificial intelligence is projected to add trillions to the global economy over the next decade, and the vast majority of that spending is flowing directly into the companies you own in the index. This is why uncertainty is actually your best friend as an investor. When people are scared, prices are lower, and your monthly contributions buy more shares. The best time to invest was 20 years ago, but the second best time is today. If you have equity in your home, but very little in liquid savings, you are not truly retired yet. You cannot pay for a flight or a medical bill with the cabinets in your kitchen. You need assets that generate cash flow without requiring you to sell your home. This is where the transition from a net worth millionaire to a retirement millionaire happens. One person has wealth on paper, while the other person has freedom in their daily life. The goal is to move as much of your wealth as possible into productive and liquid assets. If you are feeling behind, please remember that the bar to be above average is very low. The median household approaching retirement only has about $200,000 saved. If you can save just $500 a month starting today, you can surpass the average person quickly. Consistency is the superpower that beats intelligence every single time. The S&P 500 does not care how smart you are or where you went to school. It only rewards those who are disciplined enough to stay the course through the noise. Stop listening to the gurus who tell you that a crash is coming next week. They have been predicting crashes for decades, and they have missed the greatest bull market in history. The cost of being out of the market is far higher than the cost of a temporary drop. 90% of the market returns happen in just 10 specific days per year. If you miss those 10 days because you were sitting in cash, you will never recover that growth. This is why the most profitable strategy is also the most boring one. Open a brokerage account at a trusted firm like Fidelity or Schwab or Vanguard. Search for the ticker symbols VOO or SPY. Commit to an amount you can afford and set it to contribute automatically every month. Then do the hardest thing in the world, which is to do nothing. Do not check your balance when the news is bad. Do not listen to your neighbor who says they found a better way to invest. Trust the math and trust the historical record of the last 50 years. You have spent your whole life working for your money. Now is the time to let your money start working for you. Imagine a life where you do not worry about lamb fat or interest rates. Imagine being able to take your family on a vacation without checking your bank account. This is not a fantasy but a mathematical reality for those who follow this system. The S&P 500 is the ultimate legacy protection tool. It ensures that your hard work translates into a lasting financial foundation for your family. You are not just buying stocks, but you are buying your time back. You are buying the right to say no to things you do not want to do. You are buying the security that your spouse will be taken care of if something happens to you. That is the true definition of wealth. It is not about having the most money, but about having the most options. As we look toward the rest of 2026, the fundamentals of the American economy remain strong. Corporate earnings are growing and innovation is accelerating at a rapid pace. The system is working exactly as it was designed to work 50 years ago. The only variable in this equation is you and your ability to remain patient. The noise of the world will always try to distract you from your long-term goals. But now you know the truth about how generational wealth is actually built. It is built through simple and automated and relentless consistency. Take the first step today and secure your future. Your future self and your family will thank you for the decision you made right now. Thank you for watching and for taking control of your financial destiny. Remember that the best investment you can make is in your own peace of mind. Good luck on your journey to a secure and happy retirement.